So our next question comes from Sadie N. Sadie says, "Hey Robert and Austin, I'm a teacher and contribute to my teacher retirement, a 457B, and I max out my Roth IRA. I'm also an ISR swim instructor and I have an LLC on the side. My question is, should I open a solo 401k and stop funding my 457B and instead use that money to fund my solo 401k? My 457B options are very limited, and I like the idea of having more options, not just with the investments, but also with Roth and traditional and other things that I can do with this solo 401k. Thank you all for everything you do. I love listening to your podcast on my commute to work." Very cool to hear that, Sadie. We very much appreciate you listening to the show. Robert, you want to kick this one off?
Sure, I love it. We have a saying here, Sadie, and you're spot on. Here's what I would do. Up to the match with the 457B. So you want to get that free money, go up to the match. Everything else is going to go into the Roth IRA till that is maxed out. And then we want to also look at any leftover money that you want to use. You want to make sure to turbocharge your investments by having something where you get an account on carry.com, and it is the easiest way that we know of to open that solo 401k. I think it's a great idea. I have one, Austin has one, and anytime you can get that solo 401k supercharged, I think is a great way to accelerate your wealth towards retirement. But I think you're right on track, but just don't put the additional money over top the match in the 457B, because generally you are going to have limited options and it is going to underperform. That's why we want everything else in the solo 401k and the Roth component as well.
Yeah, I totally agree, right? So up to the match on the 457B, max out the Roth IRA, ensure the Roth IRA is invested properly into the index funds and ETFs we talk about, and then go to carry.com and open up a Roth solo 401k. You can do a normal one if you want, but I think Roth is always the better variant if you're able to choose it, which means now all the money, all the growth that happens inside this solo 401k for the next 10, 15, 20, 25 years, whenever you retire, is going to grow tax-free. That's what I do. I have what's called a mega backdoor Roth solo 401k, which means I'm able to invest up to like 60 something thousand dollars a year toward it. It's got over 100 something thousand dollars in this account. It is awesome. And it's all going to be tax-free when I am 59 and a half years old and ready to tap into it. So carry.com is the name of that. Not sponsored. We just love what they do over there. And the solo 401k is a great way for you to begin to turbocharge your retirement investing. I guess just the only thing I would encourage you to do is not forget about the bridge account. So the goal here again is to, like, of course, make sure we have a lot of money in retirement in our 60s and 70s. But if we are on track to have a lot of money in retirement already, let's say you've got hundreds of thousands of dollars now invested at maybe your 30s, or we'll have well over $1 million invested in your 40s, maybe it's time to dial back the retirement account specific investing and start investing more specifically toward a bridge account on public.com. So just make sure you got the bridge account somewhere in your strategy along the way.